Hi, everybody. Welcome to IC Markets Market Commentary. My name is Adam from Trade with Precision. So, the first thing I want to do is to just draw your attention. I'm going to do a very quick overview of the markets as a whole. And the first thing that I want to start with here is dollar Swissy. So, it's just a very general reflection on the state of the markets at the moment. If you are feeling that the markets, or if you have been getting the sense that the markets have been unusually choppy or undecided lately, it is not your imagination. When we just look here, for example, at dollar Swissy's last 6 or 7 days, we could see that we've had a candle up and a candle down, and we've just had this increased volatility around that period, which would have made it incredibly difficult for both swing traders and day traders to navigate those types of market conditions. So, what I often do in situations such as that is zoom out, go higher up, get a bit of an aerial view, and look at the monthly. And it is very interesting to have a look here at the euro against the US dollar. One of the things I have noticed is traditionally we've broken down through a series of levels of support, and we've actually come back to test one of the two biggest levels. We've produced a bearish candle. We have the moving averages in a bearish formation, the 50, 20, and 10. It doesn't really matter whether they are simple or exponential settings. The difference between the two with respect to this is negligible. So, however, we've produced a bearish candle. Often what happens in situations such as that, more often than not, is that if the subsequent candle breaks the low of this, we tend to see price move continue in that direction. However, it has not done that so far. We can see the price currently is attempting to work its way back up to test this level of support as resistance again. So that in itself is an unusual type of thing for the market to do. It is not as common for it to do that. And also the fact that it is testing the levels here implies that there is a possibility there are more bulls in the market than there aren't. So if we go ahead and have a look at dollar yen, so dollar yen is also, its behavior has been very similar to the US dollar throughout 2022, and now through 2023 we can see there's been a big correction. Same thing again, big strong dollar, and we could see that we've had a big correction. We've produced a very bullish candle. We've got the moving averages in a bullish formation, 50, 20, and 10. And we did break the high. So traditionally, there might have been a follow through, or the market attempted a follow through. And currently, it's actually continued to drop lower. Does that mean that this is absolutely going to change directions? No, it doesn't. It just means that the timing isn't really there. There is uncertainty in the market, at least if nothing else for the month of March. Maybe that's just what it is, March madness. And then we'll have to see how the markets do this. So most traders will still be really paying attention to the upper levels and the lower levels of these candles to get a sense of where price is likely to go. It is going to at some point have to break above or below this little consolidation so far. And that will then obviously reveal itself throughout multiple asset classes. If we move across and have a look at the global indices, start off here with the US indices, which historically are very, very strong. It is the largest economy in the world, and they tend to do very well. What is unusual, and I just want to highlight this, is we've had in the past, we can see here this really big correction here in 2019, 2020, is the COVID coronavirus outbreak. We can see the market had a big correction. We had a lot of stimulus cash, and the market started to recover from that point onwards. We've also had a bit of an overdue normal bear market correction, which has been overdue for many, many years. We've had that. We've also seen the market attempted to recover from that. And now we can see for the last 4 or 5 months, the market really hasn't gone anywhere else. It's possible for various reasons. There's almost an unlimited number of reasons as to why that is. The market has been overdue for a correction. Maybe it hasn't corrected enough. The problems that triggered it, such as inflation, such as the uncertainty around the invasion of Ukraine, and all these other various factors, global factors now, have created this ongoing uncertainty. And so the market basically feels that until a few other things have been cleaned up, it's not really prepared to continue to either sell off or become more adventurous with regards to sentiment. But what is interesting is we can see that the market that took the biggest hit were the tech stocks. And this is visible when we have a look at stocks such as Spotify and Meta with Facebook, as well as a few of the others. They've been taking quite a big hit And so, especially even also another tech stock, for example, would be say Tesla. Tesla's taken a very big hit as well. Amazon also. And so here we can see that there's been a bit of a recovery, produced a series more bullish candles than bearish candles in this area. And the current monthly candle, compared to the other charts we've just had a look at, is relatively bullish. That's a nice, interesting, possible seed of optimism in the markets there. Now, what I'm going to do is move away from the US, go and have a look at the UK. We can see here, looking at the daily is in an uptrend, just breaching above the previous high here, so confirming that uptrend to the upside. And certainly, even though we've had a bit of a correction in the UK at that time, if we go ahead and have a look at it on a monthly basis, certainly here we can get a sense that we've broken through recently to all-time highs. So the market is still operating near its all-time highs, which in itself is also not necessarily a sign of weakness. We can see that currently, although we had a big correction, the market came down to recent support and is now attempting to find support to possibly just form a double bottom to resume its trend to the upside. And the momentum indicators are still bullish at this time. So all of that is interesting to me from the perspective that it is optimistic as opposed to pessimistic. If we have a look here at the ASX as well, we can see here this is the Aussie 200 index. We can see that that is firmly taking off to the upside. There's a confirmed uptrend on the price section. With regards to the price section, the moving averages, however, are still in a bearish formation. Most traders prefer to have the moving averages in a correct formation as well. So they're bullish in a bullish formation and prices trending up with higher lows and higher highs in order for the conditions to really be accepted as nice and bullish. But observing the fact, nevertheless, that this appears so far to have found support at the most recent levels. And then finally, having a look at gold as well. So if we just move across to have a look at gold, and this is on a monthly time frame, but we are certainly confirmed uptrend with higher lows and higher highs. Price currently a little bit overextended, possibly deciding whether it wants to do a retracement or whether it wants to continue, but operating very much at almost all-time highs here. If we have a look at it from a daily perspective, we could see a series of bullish candles higher in producing higher lows. There's definitely a strong level of resistance above that. And we can see the price is attempting to push higher, and we're going to have to see how that ultimately plays out. If we move across and have a look at silver, what I find particularly interesting looking at the monthly here is that the current monthly candle is very, very bullish and is almost the entire length of its body is almost the length of the previous month's down move. And what that could, in sort of traditional terms, be implied that that is a bit of a rejection of the lows. In other words, the previous move is being sort of negated, the markets are pushing back on that. So there's clearly some resistance up ahead, but this is also a sign of a potential higher low. It isn't a higher low yet, but it is a possible formation of a higher low. And certainly for me, bodes well. We can see that gold is near its all-time highs, trying to push a little bit higher. We can see silver is definitely behind that and certainly is trying to catch up. So given the fact that we have had a lot of that the market sentiment seems and feels anecdotally skittish. It is interesting to see a lot of the markets are not necessarily giving way. We don't see a move towards a stronger dollar at this time. We could see that gold is climbing higher. We could see that some of the indices are pushing a little bit higher, although some of the US indices are a little bit uncertain. The fact that there isn't this uniform move towards the dollar in the way that we saw in 2022 is in itself, to me, a good thing. When we see the different markets doing different things on their own, they're fighting their own battles or they're climbing or dropping on their own, it generally is a sign that, in a way, the markets are not necessarily that fragile and the markets are not necessarily that skittish. So I want to wrap that up just by saying that for me, this means that there are potential opportunities in individual areas, obviously based on traders' potential strategies. Obviously, that's where they're going to be making those decisions. But it does seem to me as though the market is in itself in a somewhat healthier state than most people think it is. I'm going to leave you with that. Thank you very much. Have a great week.